What's going on, you guys? So, not trading today. Market's still not shaped up in a way that would allow for my, strategy to be used and me actually be following my rules. So, quiet week. Traded Monday, Tuesday, and then I was pretty much done. So, yeah, quiet week, like I said. Still got 5 trades left in the 25 trade sample size. With that being said, since I haven't been trading, I haven't been in the market as much. I try to do that sometimes, when I'm not trading, just kind of take a break from the market, take a breath from it, at least for a day or two, in terms of, not looking at what's going on in the live markets, in terms of the technicals, and then, just making sure that I'm not supposed to be trading, basically. But then outside that, not really looking at what's going on in the live markets, and just focusing on some back testing. But like with that, I wanted to actually stop and go through, before we go into the new week, go through some different things. I started to, go through the indices, like the stock indices myself, because, I used to watch a lot of CNBC, Bloomberg, that kind of stuff, and it was good for like learning the language of finance, especially me being a finance major. People expect you to be able to talk about those types of things that they talk about on that show, but you often recognize, like getting into trading, that it's not really what drives the market. You know what I mean? Like, it's really all about flows and fund flows, and then like algorithms like kind of tick in the direction like of those flows, right? And they offer the ability for the smart money to get in on the side of the flow before it happens, like that kind of stuff, right? And so when you understand that like the news isn't really what's driving it. They're just kind of using the news to like make stuff up and prognosticate as to why something happened after it already happened, right? And so with that being said, what I've started to do is just, really stop paying attention to news, especially in the beginning of the day. I don't listen to news or watch the financial news before I trade. My trading's done by like 1 p.m. every single day at the latest. So that's the first time that I can watch financial news in the day, is like 1 p.m. But I really don't even pay attention to what they talk about in terms of like where the indices are moving, all that kind of stuff. I like to do my own analysis on that. I'm not saying that I'm smarter than anybody else, but I'd rather live and die on my own sword than, somebody else and telling me, oh, get out of the S&P because of XYZ, get out of the NASDAQ because of what, yada, 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 right? So that being said, that's what I'm gonna go to do today. I'm gonna go through some indices and just kind of like some quote unquote important commodities at this point. Things like oil, things like pig iron, like that kind of stuff, because steel and all that kind of stuff and manufacturing, those are all important things. And like pig iron specifically is like important right now, especially because of like the Russia situation, Russia-Ukraine situation, you know what I'm saying? And like wheat as well is another good example of like important commodities, right? So yeah, I'm just gonna stop talking, gonna look at that now. Let's get into it now. All right, so we're looking at the commodities here, the indices here. You can see we have S&P, NASDAQ. I do have the Dow now. I don't have the Russell, but that's okay. Sometimes I look at the Russell, sometimes I don't. But you also have the VIX in here. So we're gonna start by looking at S&P. We'll likely look at like things like the FTSE as well. You can see I have the CAC and the UK saved in here, but that doesn't mean I don't look at the FTSE or the DAC or anything like that, right? So on S&P, I like this in terms of me owning stocks, right? So we've recently run out this high, okay? And we've recently run out this high as well, so that's great. We've set up this fair value gap in here. We also set this one up in here, right? So we've pushed down into this first one, but we also have this one. So I wouldn't be surprised if we get more of a retracement on the S&P. Drop down to the daily, okay? So we can see that we're at a nice daily area, but if we run out that daily area, let's check the data window. So swing low here, 81, and then swing low here, we got, yeah. So we ran out this low here, right? So we could definitely keep running lower because like we said, we spotted this fair value gap here on the weekly. Here's that same line on the daily. So again, we can see another fair value gap, pretty tiny compared to the one that we're looking at the weekly, but it is a fair value gap nonetheless. Here, cool. You get another one here, and another one here, okay? And even another one there. So we could retrace all the way lower to 42.50, okay? And if we throw a Fibbo on there, let's see what we got in terms of retracements. So yeah, or at least 4250. All right, that would be the 4254 level. Is better in terms of the fib retracement, and then just getting below this low here would be 51.99. So 51.98. Right? So it's kind of like the line in the sand almost, right? The invalidation point. Really, it's below this here. Okay, as our invalidation point. If that happens, if we get below this, then maybe it doesn't feel as good to own stocks at this moment, right? So that's S&P. So we're gonna see if we can get a push lower there. Let's look at the NASDAQ. My portfolio is definitely more NASDAQ heavy than S&P heavy, but I do own some stocks that are in S&P. So that being said, again, and this is pretty common of indices. What's actually weird is when you see the indices not agreeing with each other and kind of not moving in the same direction as each other. Go check that out on ICT's channel. He talks a little bit about that. And I've actually talked about it with friends who use ICT. And especially when he's trading futures, we think that that's a very important part of how he trades. Obviously, we're just prognosticating, speculating. We don't know for sure. But like we have noticed that, he kind of brings that up, the idea of like when the indices aren't doing the same thing. And we've also tested ourselves, me and the other friend that uses ICT, Amber, we've also tested ourselves, and like, because she trades US 30, which is the Dow, right? And so like she trades an indice, right? So she's noticed that as well, and I've noticed it in my back testing, right? So it's interesting to see, but definitely go check it out for yourself. So getting back to this, NASDAQ, again, we've run out 2 highs, so that's great. And again, fair value gap here, fair value gap here, fair value gap here, fair value gap here on the weekly. We've pushed down into this one on the weekly. On the daily, have we run out a swing low? We haven't run out a swing low, so that's a bit different, okay? So we could push up, but again, we could continue to push lower because of a fair value gap down here and a fair value gap down here on the daily. Again, let's throw in that Fibbo, body to body. Here, we have the 79 retracement level, and we have it at 47.75, so about 47.75, right? Again, we have another fair value gap here, and we have another one here as well, and this one kind of comes more in line with the 62 and 70 level. So this one has 2 levels kind of in line with it. So honestly, if I had to guess, if I was a betting man, which I am because I trade, I would say it'd come down to here. So that'd be nice. It wouldn't feel good in the short term, but it would be nice to see us pull down here and bounce and go from that area. Okay, so that being said, and we'll finish it out by looking at the Dow and the VIX. So we're just gonna focus on US indices at the moment. So the Dow has only run out 1 high, okay? So we run out 1 high, and we broke below a swing low, okay? So we run out 1 high, we got this fair value gap in here, we've already pushed down into it, okay? But we can continue pushing lower, all right? So fair value gap, we could push all the way down into here, just as long as we don't push past that guy, okay? So we could definitely push lower, okay? We have another one here and another one here, okay? Again, let's throw in that Fibbo. Okay, so we got this. So that's the 50 level. So probably 62. What is that? 30. What is that? 1769. Well, up here as well. 94.97. So 94.97 is first level, right? So yeah, that's the level because that's the only fair value gap that we can see. We're already in this one as well. So we could definitely bounce from this one. But if we pull back, like I said, 94.97 to 31.91 to 24.80. Sorry, it's a lot larger. Is the levels. So yeah, that's the Dow, and we'll finish it up by looking at the VIX. If you trade options and you're not looking at the VIX, you're kind of fighting with one hand behind your back. That's just my opinion. So the VIX, I love to see this in terms of us trying to expand trends higher on the indices. The VIX has broken lower, right? And we've broken swing lows lower. So I love to see that. I love to see a low volatility market, and we're hoping that the market can start trending, right? Or it looks like the market can start trending. So again, much like every other indice we're looking at, we have this breakdown and we have If I write gap in here, which we've begun to fill, push down. We have another one in here as well, which we could fill. Don't have to, but could. So we put that here, like so. Daily. Drop down to the daily. We see, okay, up here is the next one on the daily. Again, throw in that Fibbo, body to body. Okay, throwing on a fib. You can see a 62 level. Okay, we also have another one in here as well. So I'll put this in here. 62 level kind of comes in line with us getting above this one and going into this, which is also an order block in this area as well. All right, so that's 29.84 is the level on the fix that we can see a pullback into, and then a retracement lower. All right, and that kind of agrees with indices in terms of we could possibly see a pullback lower, which if we're going lower on stock indices, that's generally when people kind of get like skittish, like start freaking out, all that kind of good stuff. That's when you start to see volatility increase, right? And so we would see volatility increase here, but then, you know, as things start to kind of settle down, if we get a bounce and start moving again, people start getting more comfortable, and then we start to see volatility start to decrease, right? That's all the indices, guys. I hope you enjoyed this video, man. I hope it provided some value to you guys. And again, like, if you like anything about the way that I analyze the market whatsoever, please go check out ICT on YouTube. I'm going to leave a link in the description to his videos, to the first mentorship for 2022. I'll be honest with you, I started taking the first mentorship, like he has a whole list of mentorship videos for 2022. I started in 2022, obviously, but I've been watching ICT since the beginning, since the end of 2020, beginning of 2021, really. And so like there's things that, and I've, gotten more into it. I started watching it loosely at the beginning of 2021, that kind of stuff, right? So there's certain things that I understood when watching the mentorship that kind of was just like already common knowledge to me from his teachings. So if you're confused about anything, definitely go back and check out all the playlists he has. He's very good about knowing what needs to go together for you to understand what he's talking about. So definitely go check out his playlist. Super helpful. Other than that, guys, hope you enjoyed this video, man. Hope it provides some value to you guys. And please join me again next time. Thank you.